Welcome to today's market analysis for September 2025. Buckle up, traders, because we've got a roller coaster of candlestick signals to unpack. From bullish engulfing patterns in tech to bearish harami in utilities, today's session was a technical analyst's dream. But before we dive in, let me ask you this. Are you ready to spot the hidden opportunities that most investors are missing? Stay tuned, because in the next few minutes I'll reveal the sectors poised for breakout and those on the brink of a reversal. Today's session featured volatile swings across major indices, with the Dow Jones, S&P 500, and Nasdaq exhibiting mixed momentum. The technology sector powered the upside with broad gains, surging an impressive 5.2% and adding $87 billion in market capitalization. Communications followed closely, climbing 4.1% and increasing its market cap by $52 billion. However, energy and utilities weighed down index averages, with energy dropping 3.8% and shedding $41 billion in market value, while utilities declined 2.7%, losing $18 billion. Stronger intraday volume highlighted active retail and institutional flows into growth sectors, with trading activity peaking between 10:30 a.m. and 11:45 a.m. Eastern Time. Let's break down the candlestick structure we observed today. Analysis of the major indices and sector ETFs revealed the dominant candlestick durations used for signal detection. We primarily focused on 15-minute and 30-minute intervals for real-time reversals and momentum. While daily candles highlighted the session's primary trend direction, in the technology sector, multiple bullish engulfing and hammer formations appeared, mainly on 15-minute and 30-minute charts, indicating strong momentum. A particularly notable hammer pattern formed at 2:15 p.m., signaling a potential reversal from the midday dip. The sector is currently attracting positive sentiment and appears undervalued, especially among small and mid-cap names. AI and cloud computing stocks in the $150 billion market cap range showed the most promising technical setups. Communications services displayed breakout, Morningstar, and Maribozu patterns, signaling continued sector leadership. A textbook Morningstar formation emerged on the 15-minute chart at 11 a.m., siding with a surge in trading volume. Rising retail flows highlight attractive entry points, particularly in mid-cap streaming companies with a combined market value of around $80 billion. Shifting our focus to the bearish side, energy and utilities sectors saw an increase in bearish candlestick structures. Energy stocks formed multiple hanging men and 3 black crows patterns, predominantly on 60-minute charts. A particularly ominous 3 black crows formation appeared between 1 p.m. and 3 p.m., suggesting potential correction risk and possible overvaluation, predominantly in large-cap stocks. A classic evening star emerged over the past 3 sessions, with today's bearish candle completing the formation and hinting at further downside potential. Healthcare and consumer defensive sectors painted a picture of stability and indecision amid macro uncertainty. Doji and belt hold signals were prevalent on 4-hour and daily charts, reflecting a cautious approach from investors. In the healthcare sector, defensive biotech stocks with a combined market cap of $45 billion showed the most balanced technical picture. Consumer cyclicals offered a glimmer of hope for bargain hunters. With Morningstar patterns appearing on 15-minute charts throughout the day, sector gained 2.3%, adding $30 billion in market value. With growth-oriented retail stocks leading the charge, now let's dive deeper into the sector and industry highlights. In technology, we counted 11 bullish patterns versus just 3 bearish ones, with 30-minute and daily charts providing the most reliable signals. The sector's undervalued status is most pronounced in small and mid-cap AI and cloud infrastructure companies, representing a $150 billion opportunity. Communication services showed a similar bullish bias, with 9 bullish patterns against 2 bearish ones. The 15-minute and daily charts were most informative here, highlighting undervalued opportunities in the $80 billion mid-cap streaming segment. Energy told a different story, with 4 bullish patterns overshadowed by 13 bearish ones. The 60-minute and daily charts painted a particularly gloomy picture, suggesting the sector may be overvalued at current levels. Utilities mirrored this bearish sentiment, 2 bullish patterns versus 7 bearish ones on daily charts, pointing to potential overvaluation and increased downside risk. Healthcare maintained a balanced outlook, with 6 bullish and 6 bearish patterns observed on 4OR and daily charts. The sector appears fairly valued, with a $45 billion slice of defensive biotech stocks offering the most stable technical setup. Consumer cyclicals showed a slight bullish edge, with 7 bullish patterns versus 3 bearish ones on 15-minute and daily charts. The sector appears slightly undervalued, with $30 billion in growth-oriented retail stocks presenting the most attractive technical profile. These candlestick formations were most frequent in technology and communication sectors, with bullish signals clustering in small and mid-cap stocks, signaling breakout potential. Energy and utilities saw the highest count of bearish candlestick patterns, pointing to risk of reversal and overvaluation among large caps. Turning to sentiment and outlook, retail and institutional sentiment remains strongly positive for growth-oriented technology and communication stocks, reinforced by high-frequency bullish candlestick formations and elevated by volumes. Niche mid-cap sectors in streaming and AI infrastructure are especially attractive for swing entries. In contrast, energy and utilities face headwinds from bearish technical readings, suggesting traders should consider protective hedges or rotation out of these sectors to avoid potential drawdown. To summarize our findings, let's review the key data for each sector. Technology saw 11 bullish patterns and 3 bearish patterns, primarily on 30-minute and daily charts, and is currently undervalued. Communication displayed 9 bullish patterns and 2 bearish patterns, most evident on 15-minute and daily charts, and is also undervalued. Energy showed 4 bullish patterns, but a concerning 13 bearish patterns on 60-minute and daily charts, suggesting overvaluation. Utilities presented 2 bullish patterns versus 7 bearish patterns on daily charts, indicating potential overvaluation. Healthcare maintained a balanced 6 bullish and 6 bearish patterns on 4-hour and daily charts, reflecting fair value. Consumer cyclicals exhibited 7 bullish patterns and 3 bearish patterns on 15-minute and daily charts, hinting at slight undervaluation. In conclusion, September 23, 2025, revealed a technical battleground where technology and communication sectors are stacking bullish candlestick structures across intraday and daily timeframes, suggesting potential sector rotation and future outperformance. Energy and utilities warrant caution with high concentrations of bearish reversal signals and signs of overvaluation, particularly in large-cap holdings. For traders and analysts, small and mid-cap plays in undervalued growth sectors offer actionable opportunities, backed by candlestick confirmation and volume trends. Keep a close eye on the $150 billion small and mid-cap AI and cloud computing segment in technology, as well as the $80 billion mid-cap streaming sector in communications. These areas show the most promising technical setups and could lead the next leg up in the market. As we wrap up today's analysis, remember that candlestick patterns are just one piece of the puzzle. Always combine these technical signals with fundamental analysis and broader market context to make informed trading decisions. Stay vigilant, keep your charts updated, and may the candlesticks be ever in your favor. Until next time, this is your market analyst, signing off. Thank you so much for watching. I hoped this video helped you out. We'll see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.